The financial system implosion is imminent, guys. This is not funny at all. From Elon Musk, banks evaluating you for a 2K credit limit, right? Inspecting. You have to check all the boxes. And then banks evaluating their own $100 billion bond portfolio, right? It's all broken, guys. Nothing makes sense at the end of the day. Remember, they are not here to be your friends, right? They actually want to distract you in order for you to not succeed or persevere, so to speak. And remember, how do we know all this whole banking situation is what, guys? It's all what? It's all execs of Silicon Valley Bank sold before collapse per trading plans. It's all pre-planned, right? We're not even making this stuff up. They knew this is why they sold, guys, before the damn collapse, right? Because they got the warning or the signal ahead of time. Banks, when a single mother overdraws her account by $3, and then banks, when they do no risk management and need $50 billion from the government, immediately do not blow up the economy, right? Or immediately to not blow up the economy. Exactly, guys. This is the craziest thing. They should bail us out, guys, right? That's what we were talking about. SEC evaluating banks fumble billions. They should, but at the end, they don't care about the people. That's the thing. And this is how we know it's about to get even worse, guys. It's happening. Economists discovered that dozens of banks may face risks similar to Silicon Valley Bank. Here we go, folks. No way. It's literally time, right? We're not even making this stuff up. Let's talk about it. But before we do, nice job regulating governments, right? Don't worry, guys. The FDIC will ensure all of them. Guys, this is not good because how many banks are on the verge of collapse, so to speak? 186 banks found to have similar risks as Silicon Valley Bank. 186, folks. This is not a joke. That's literally the whole financial system. Wait a minute. What's happening? I can't believe it, guys, right? As soon as one bank goes down, it's like this, guys. Right? All the other banks go down with it. I can't believe it. What's even crazier is we actually talked about these events taking place. Remember what we talked about. It's not all about moon date, guys, right? When XRP to find out the moon date. The only reason why we're trying to find out the moon date is because for fun, for entertainment. We have always stated, or I did at least a long time ago, that look out for events first because events tell you and foreshadow the moon date for XRP. It's quite clear and it's quite simple, guys. These are the early warning systems, right? To fail. A recent study by economists identified 186 banks at risk. These banks face issues similar to that which caused the collapse of Silicon Valley Bank. This is crazy, guys. SIVB collapsed earlier this week due to the bank's assets being diminished by increasing interest rates. This led to customers withdrawing their uninsured deposits. Oh, and don't forget, we're going to be talking about my master timeline here very shortly, guys, and how we're basically almost about to get confirmed by the Federal Reserve. We actually did by a large percentage, but by the end of this month, we'll be 100% confirmed by my timeline. So we're going to be talking about that in just a bit. Before we do, let's continue with this. During the Federal Reserve's swift rate hike campaign, the economists evaluated individual U.S. banks. They assessed asset books and market value losses. Assets such as treasury notes and mortgage loans can decrease in value. This happens when new bonds offer higher rates. The economists also analyzed the bank's funding percentages. They focused on funding derived from uninsured depositors, those with accounts holding over 250K. Their findings suggest a potential problem. If half of these uninsured depositors were to withdraw funds rapidly from any of these 186 U.S. banks, guys, even insured depositors might face impairments. This is due to insufficient assets available for all depositors. In such cases, intervention from the FDIC could become necessary, right, to try and save the banks. If this scenario were to occur, then it is crucial to note that a significant limitation in this research. The study does not consider hedging strategies. These strategies may safeguard numerous banks against rising interest rates. This is why this is very important. This interest rate problem, guys, we're about to talk about it here very shortly. Just 2 minutes. In their paper, the economist stated, our calculations suggest these banks are certainly at a potential risk of a run, absent other government intervention or recapitalization, guys. Again, 186 banks, by the way. And here we go, guys. We basically got confirmed about my timeline. The Federal Reserve, like we stated before, this is the month where they confirm our timeline or not. So check this out. QE is back. Quantitative easing is back, folks. What did we talk about all this time? You don't say? Come on. About $300 billion in assets added to Fed balance sheet in the last week, right? Look at this, guys. It was going all the way down, right? Tightening, all the way down, and then what just happened, guys? About 300 billion in assets added to Fed balance sheet, which skyrocketed, as you guys can see, right? It wiped out the previous many months, guys, right? So basically, the Fed tightening is over. The next shoe to drop will be their decision on interest rates next week, pause or 25 basis points. This is what we're talking about, guys. If they go 50 basis points, they just stated it's not good because these banks will literally collapse and die and get cannibalized by the bigger banks. We're not making any of this stuff up. And remember, we told you that my master's timeline is about to get confirmed, folks, right? Quantitative easing, guys, basically injecting all this liquidity, right? Printing, which means one thing: the assets we hold for the stock market and cryptocurrency market shall rise like never before. The craziest euphoric run is upon us. Not to mention, when the collapse takes place, they're going to pull the plug or pull the rug underneath everyone, guys, when everyone is asleep. Remember what we talked about right here. This is what I believe will take place, the sequence of events till 2025. This was tweeted right a day before Sol started, right? The month of Sol, guys, June 17, 2022. What did we talk about here? That the stocks and cryptos and stocks bottom out in the month of Sol, June 18th to July 15th. This was back in 2022, and XRP hasn't gone below then, guys, right? Or below that price. What was it? 28, 29, 30 cents around there, right? We go on an insane bull run, guys, to 24, 25. Let's see what happens, unless these banks collapse on itself right now, right? Again, we are in uncharted waters, guys. But at the end of the day, look what I say right here. Problem is the century cycle completed. All hell breaks loose. House of cards crumble. Reaction. Equal world is in panic. Solution. Governments intervene with the new financial system, which is now born from the ashes of the old system, right? So it's quite clear, guys. How don't people see what's usually happening at this point in time, right? This right here, QE, will play a part of the bull run we're about to see if they keep going with the flow of QE, right? If they keep continuing with it, guys. But it is a little bit strange because Justin, European Central Bank, raises interest rates by 0.50% to 3.50%, as you guys can see. So what are they trying to do, guys? What is the game plan here, right? Look at that. That's fascinating. Are they purposefully trying to get the general population to lose confidence in paper currency to get them to accept CBDCs? If so, we have a few more years of really roughly years, right? Again, if they're going to keep this is the European Central Bank, guys. It's not the Federal Reserve, right? It all depends on the Fed. I forgot the FOMC meeting. I think it was on the 23rd, 24th, somewhere around there, guys. It all depends on that day, because if they go with a 25 basis points, that's better obviously than a 50. 50 is not good at all, guys, because it's just going to put a lot more pressure into the financial system. But if they pause it, right? If they pause it, that's really good, guys. That's really bullish for assets, cryptocurrencies, stocks, right? These indices, and then the housing market, all these markets basically, or most of them. But it's really bad for us, the people, because inflation will not stop, guys. It will just skyrocket, right? Hyperinflation will be imminent. And this is why, guys, a lot of people are actually talking about the financial system is broken, everything comes to an end. Eventually, the feds know this. All this is to buy time to introduce a new system, CBDC. It's coming, right? Exactly, guys. I can't believe now people are finally starting to catch on. Seems like we were right all this time, guys, but most people didn't really see what's really happening many years ago, but we did, guys, right? But let's wait and see. Again, it all depends on what they do in a couple of weeks or next week or so from now, guys, right? Bankers are looting the world. You're not in the middle of a recession, you're in the middle of a robbery. Because what happens every time, guys, they collapse these markets or crash them, The wealthy people buy it up, but you don't because you're now fearful and scared, which means now the assets are concentrated even to the, this is where the saying, the rich get richer, guys, right, comes into play. The assets will now then be, at that point in time when the collapse hits, they're going to buy everything up, guys, right? It's going to be the craziest buying opportunity. But for XRP, I'm not, for certain assets, I'm not sure, because they may rise during the same time the collapse happens, right? Or it's going to be after, guys, because the new financial system is on the horizon, right? But everything else shall collapse, guys, right? And go to ash. Maybe reborn once more at that point in time. From Benjamin Cohen. Basically, 4 months of QT gone in 1 week, by the way. Crazy. FOMC should be interesting next week. Seems like 25 basis points is the most likely outcome. Pausing seems premature, but 50 basis points might raise too many eyebrows. Exactly, guys, right? Then, of course, the market has to figure exactly how many of the 25 basis point rate hikes are coming. I don't think many, guys. I think maybe one more, maybe, right? And then they're literally going to pause it, because how I don't know, guys. How much more can they keep raising and raising and raising, right? Before it definitely collapses, and they truly do not want it to collapse, guys. I could assure you of that much. But at the same time, they do. That's the thing. Wait a moment. It's a paradox. Of course, they're trying to collapse it. That's their whole game or end goal, guys, right? But the question is, at this time, I'm not sure. But maximum by 2025, I believe, not financial advice. Markets now think there's a higher probability of no hikes at the next FOMC than 25 basis points. The economy is getting sick quickly. Exactly. Nothing makes sense. We're living in an upside down world, guys. It's all a show, right? A clown show, so to speak. So let's see what happens in the next few weeks, guys, because the outcome will be made for the timeline and whatnot, guys, right? Of the future timeline. So let's prepare. Last but not least, from Watcher Guru, Justin, Silicon Valley Bank CEO, who sold $3.5 million shares weeks before its collapse, was spotted in Hawaii. There you guys go, right? It's all so he got away scot-free. So it seems like, guys, enjoying his life now, right? Nothing makes sense. Again, they don't care about you. They only care about themselves, guys, right? They're all signed under NDAs, contracts for a specific purpose, to say the least, at the end of the day. And then I said your money is safe in our banks. Exactly, right? Crazy, 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 guys. Let's prepare for the future world, because we're definitely entering a new world, so to speak. Now, financial advice. But anyways, that's so fast. Amazing, see ya.